So in this video, I'm gonna try to explain to you what an exhaustion pattern is and why the chart that you're looking on the screen right now is actually very, very bullish. So we're gonna start by explaining first, and hopefully you learn something. Maybe even I learned something, because oftentimes when I explain things, I learn myself some other things that I did not think about. Anyways, everybody knows what a bull flag is. You have some kind of pole, a price that goes towards the upside, and what happens after that, the price starts flagging, but flags towards the downside. This is a very normal consolidation pattern that happens in a trend. Options very often. So you go towards the upside, you come to some kind of resistance level, and you start flagging towards the downside. This is called a bull flag, right? And oftentimes the reason why this bull flag works is because there is no sell-off, there is no weakness in price. I mean, just consolidating up here at the top, right? So you had a big move towards upside, there is no selling, the price just consolidates slowly. You know, get everybody to take profits, whoever wanted to take profits. You will see also on the volume, that volume goes towards downside, which is very, very normal in any kind of consolidation. Doesn't matter what kind of consolidation it is very normal thing to have volume going down, and volume goes down and then price continues towards the upside. And often the target up here is target of the flagpole. So you take the flagpole up here towards the upside up here, and that's the target. And there is very logical reason for this. Is not because, you know, people suddenly, you know, figure out, oh my, this is some random target up here because, you know, the flagpole, whatever. No, the flagpole starts from the bottom of something towards the top of the something. That's usually some kind of channel, and this channel goes in double side off. This channel that flags towards downside, often some kind of resistance level that, you know, goes towards downside over here. So the flagpole should be from the breakout up here on the top of the flag, you know, double the distance of this previous channel. So this channel doubles the distance up here towards the top. That's the next target, right? So these bull flags up here that consolidate and people look for the next target oftentimes goes all the way up here towards the top. So what is actually an exhaustion pattern? When, unlike the bull flags, the exhaustion pattern have a pole, have a big fast impulsive move towards upside, and they do not flag towards the downside. They don't do this up here or any kind of triangle or anything like that. They actually flag towards the upside, and this is actually a very, very bearish thing to do. Oftentimes you will see in some kind of consolidating trends, in some kind of, you know, bearish markets and stuff like that, where we have a big move towards upside, and you will see flagging at the top of that move towards the upside. Oftentimes, you know, you might have a big sell-off and then, you know, extra flagging after that, but, you know, it's still flagging towards the upside. These flagging towards the upside moves, these are called exhaustion patterns. I don't know if anybody uses, you know, but at least, you know, that's what we call it on this channel. This move, this is exhaustion pattern. So you got a bull flags and exhaustion patterns. And the reason they are exhaustion patterns is because a lot of people start buying, they start FOMOing in, and everybody starts FOMOing up here. But there are still buyers left, and they're getting exhausted, right? They're trying to push price up, but there is just not enough buyers. But, you know, the last of the buyers keep on buying, and this pattern over here, oftentimes, more than not, is breaking towards the downside. It's very normal for this bearish pattern to break towards the downside, and it's very easy to, you know, trade this at the top of the range and then short this towards the downside. We don't know whether it's going to start breaking down here, or here, but, you know, at the top of the range, and then you short it towards the downside. You will also see, just like in the bull flags, this pattern up here will have volume that goes towards downside. So volume will be going towards downside. Why? Because, you know, buyers are still buying this towards the upside, and they're trying to push it up, but, you know, there are less and less buyers, and the price gets exhausted, and then it goes towards downside. So that's exhaustion pattern. And what you see over here, this exhaustion pattern has been happening on the chart. It goes something like this up here, this channel. So we had a big move and exhaustion pattern, but this exhaustion pattern actually broke towards the upside. Now the big question is what's going to happen next, and why is this so very, very bullish? Because it is very, very bullish. The thing is that everybody thought this is going to go down, and this is a normal thing to do because people do not understand the markets, people do not understand how, you know, price works. What happens when stuff happens, they look only on patterns and just assume that, you know, 70% downside, 30% upside, you know, so they bet on the downside, but they do not know why do they bet on the downside. But we are still very much bullish up here, and we are bullish up here in this exhaustion pattern. This is going to break towards upside eventually, and the reason for this is very, very simple. In any kind of strong trends, you will have exhaustion patterns breaking towards the upside. You will have bearish pennants or rising wedges breaking towards the upside. You will have a very steep channels breaking towards the upside. So even steep channels, anything that goes towards the upside is by default, more bearish than bullish. But anytime you break this towards the upside, you become extremely bullish, because because over here we had the first move, then we had buyers buying in, buying in, and they actually managed to break towards the upside. So right now they are retesting this bottom down here, and we are looking for the next move towards the upside. The fact that we managed to break the channel exhaustion pattern towards the upside, the extremely bullish move on the chart. We have been bullish for a while. We are right now very extremely bullish. Over here we went from 26k all the way up to 36k. We pulled a little bit back, created this exhaustion channel. Right now we're breaking this towards the upside. Anytime you have a bearish pattern, doesn't matter what kind of bearish pattern that is, but it's very, very important. If you have a bearish pattern, whatever that is, you decide what's a bearish pattern. If you have a bearish pattern and that does not play out, that means there is a strong bullish sentiment behind that move that's pushing it out of that pattern right now. So the fact that we are right now breaking over here towards the upside, up here, it is strong sentiment move that is going to continue towards the upside. But there is no risk involved over here. Of course not financial wise. There is no risk involved, because the price only needs to get back inside this small channel up here, inside this exhaustion pattern, for us to become bearish. It's such a small move to become bearish, and if it goes over here, it's even more bearish. So we are not expecting this move up here or this move over here. We are just expecting retest over here, and right now continuation towards the upside, because this move up here, the move outside of the exhaustion pattern, was very, very important, and that actually happened. So right now what we are looking for is the move outside of this channel over here. And just like in the bull flags, we have the target. Because the bull flag goes something like this up here towards the top of the channel up here, of course, on the exit up here towards the upside. Now, why is that the case? Again, the channels, guys. This is not just random lines. Everything has a reason. When you see, you'll often see, some kind of falling wedge. This is a extra goodie for you guys, and you will see, price goes something like this and then falls towards downside, and they say always like, oh, the target down here after the breakdown is the distance over here towards downside. It is very normal, but people do not understand why is that so. And the reason that is so is because this is a falling wedge inside a channel. It's always a channel, it's always a trend, and the distance is down there on the bottom, right? So this is a channel, this is just a falling wedge inside the channel, and that's why the distance is down on the bottom down there. Right, and the same thing goes for this exhaustion pattern. The distance, the target is the distance up here on the channel. So there is some kind of channel that goes something like this up here. You see this trend line going towards upside. That's why we have this exhaustion pattern up here at the top, and the distance is between these two lines. So there is some kind of channel up here. We might try to figure it out, but the distance is up here at the top somewhere, right? Around 46k. So this exhaustion pattern breaking towards upside up here is strongly bullish, and the target is doubling of the channel all the way up to the 46k. That's all I wanted to show you. That's all I wanted to tell you. If you liked the education, hit the subscribe button, like button, any kind of buttons down below. Post a comment and say, guy, you're the best. Also, if this video plays out to 46k from over here, you come back and you say, hey man, you the best. I just put new drapes in my office, so I'm in a very good mood, so I thought I should share something. Enjoy the day, guys. Bye-bye. Where's my outro?